Subscribe our channel eFinance Management and click on the bell icon to get update on new videos. Today we are going to explain meaning and different types of asset. An asset is a resource or property having a monetary or economic value possessed by an individual or entity, which is capable of producing some future economic benefit. Assets are generally brought in business to benefit from them and to increase the value of a business. In simple language, it means anything that a person owns, say a house or equipment. In accounting context, an asset is a resource that can generate cash flows. Assets are found on the right-hand side of the balance sheet and can also be referred to as sources of funds. Assets are generally classified in the following three ways depending upon nature and type. On the basis of convertibility, assets are classified as current asset and fixed asset. On the basis of physical existence, assets are classified as tangible asset and intangible asset. On the basis of usage, assets are classified as operating asset and non-operating asset. Convertibility. One way of classification of assets is based on their easy convertibility into cash. Current assets, assets which are easily convertible into cash like stock, inventory, marketable securities, short-term investments, fixed deposits, bank balances, debtors, prepaid expenses, etc., are classified as current assets. Current assets are generally of a shorter lifespan as compared to fixed assets which last for a longer period. Current assets can also be termed as liquid assets. Fixed assets are of a fixed nature in the context that they are not readily convertible into cash. They require elaborate procedure and time for their sale and converted into cash. Land, building, plant, machinery, equipment, and furniture are some examples of fixed assets. Other names used for fixed assets are non-current assets, long-term assets, or hard assets. Generally, the value of fixed assets generally reduces over a period of time, known as depreciation. Another classification of assets is based on their physical existence. According to this classification, an asset is either a tangible asset or intangible asset. Tangible assets are those assets which we can touch, see, and feel. All fixed assets are tangible. Moreover, some current assets like inventory and cash fall under the category of tangible assets too. Intangible assets cannot be seen, felt, or touched physically by us. Some examples of intangible assets are goodwill, franchise agreements, patents, copyrights, brands, trademarks, etc. These are also classified under assets because the business owners reap monetary gains with the help of these intangible assets. A company's trademark, brand, and goodwill contribute to its marketing and sale of its products. According to a third way of classification, assets are either operating or non-operating. Operating assets. All assets required for the current day-to-day transaction of business are known as operating assets. In simple words, the assets that a company uses for producing a product or service are operating assets. These include cash, bank balance, inventory, plant, equipment, etc. Non-operating assets. All assets which are of no use for daily business operations but are essential for the establishment of business and for its future needs are termed as non-operational. This could include some real estate purchased to earn from its appreciation or excess cash in business, which is not used in an operation. To conclude, the following table will give you a clear picture of the types of assets. Thank you. Please subscribe, like, and share our video.